Okay, at the end of our fiscal period, we have to start preparing some financial statements. So that's kind of what we were looking at here in 6-3. And so we're first going to start out by looking at our balance sheet. So the accounts that get reported there would be things like our cash, accounts receivable, supplies, accounts payable, capital, and drawing. So if you think about that list, what do they all entail? That's pretty much all of our main accounts, our assets, our liabilities, and our owner's equity. So that's basically what our balance sheet is. It's a financial statement that reports those things: assets, liabilities, and owner's equity as of a specific date. Then we also have to prepare our income statement. So that's kind of everything else that we didn't just report on the balance sheet. So it's a financial statement showing our revenue and expenses for the fiscal period. And so then one of the last things that we do as we're kind of finishing up the worksheet is figuring that out. Did we make money or not make money for that fiscal period? So if we made money, that's going to be known as our net income. And to calculate what that amount is, we're going to take the difference between our total revenue and our total expenses. And if our revenue is greater, that's going to mean that we have a net income. And then net loss is virtually the opposite. So the difference between our total revenue and expenses still, but then in this scenario, if we're losing money, our total expenses are greater. And so just kind of a final way to determine, just kind of at a glance more, if we have a net income or a net loss, is looking at our balance sheet totals. And so if our balance sheet debit is greater than our balance sheet credit, that means we have a net income. And then net loss would be our balance sheet debit is less than our balance sheet credit.